we certainly were pleased with the quarter's results. We made some $500 million in the quarter. If you looked at our pre-tax, pre-provision net revenue, it was the highest in over a decade. So very pleased, and that was both revenue production as well as expense management. On the revenue side, our net interest income continues to benefit from the hedging program we created some 2 years ago. Made almost $1 billion, right at $1 billion in net interest income in the quarter. From a non-interest revenue standpoint, mortgage continues to just knock it out of the park. Very pleased with the production, which will be, we think by the end of the year, twice what 2019 was. Our capital markets business continues to do well. Our wealth management business continues to do well. Our card and ATM fees are also strong, driven by debit card usage, which is higher than it was over a year ago. As we look at credit card spend hadn't quite recovered from a year ago. And we think that's due in large part to consumers really watching and making sure they spend only the money that they have. And so we haven't had a lot of loan growth in credit card because of that. Our balance sheet continues to benefit from large deposit growth, both consumers, that's stimulus money, that's savings growth, that's checking account growth. Our business service customers continue to bring cash back to Regions from places where they were trying to look for better yields. It's now coming back to Regions. So we're excited about the deposit growth. We're at a historical high on deposit levels at this time. As we then get in transition into credit continued to improve. Very pleased that our charge-off rate went from some 80 basis points to 50 basis points. So a 30 basis point improvement in one quarter at $113 million worth of charge-offs, lower than we thought going into the quarter. And we continue to bolster very strong reserves for loan losses as well. Deferral rates were some 6% last quarter. They're down to 2% this quarter. When we look at high-risk industries from a business standpoint, those high-risk industries had loans totaling about $8.4 billion last quarter. They're down to $6.6 billion this quarter. So continued massive improvement in credit quality, and we're excited about that. Sets us up for a very strong finish to the year, and also positions us very strong for 2021, which all we need to do is stay focused on the things we can control. We have a great strategic plan that we shared with our board just last week. We're excited that Regions is really, we believe, set up to outperform our peer group in the fourth quarter and going to 2021. So very good quarter and a great setup for success in the future.